worth, right? Whoever sells it. Wrong. I'm Charlie. Welcome to Moving Home with Charlie, and thank you for coming.
Charlie Landing grew up in Sussex, is the founder of Best Agent and presenter of Moving Home with Charlie.
If you want to find one of these guys, look out for those compassionate professionals. All estate agents are not the same.
So Charlie, what would be your advice for people interested in buying new builds right now?
Don't overpay. Do buy, but don't overpay. That's why I say disregard the guff. Read into the numbers and look, and it's buried. The bad news is buried in the small print, okay?
Good evening, everyone. Welcome to the Property Press Awards.
They may or may not be telling the truth, but you should form your own view. Get out and view, get out and view, get out and view. You cannot be in a position to make offers and have the offers accepted if you're not viewing. Just be out there viewing. Pay attention to the back of the class. If you've not been watching my videos, I did one just a couple of days ago. Disregard the guff, guys. Good evening, everybody. Welcome to another live stream. I'm Charlie Lambden. This is Moving Home with Charlie. Today, as all of you by now are almost certainly aware, the Bank of England raised its base rate by 0.5% to 5%. And the thumbnail title of this video is Bank of England Breaks Everything. You'll see why that's the title. I'm going to go on to that and describe what's happening. But I need to welcome back all my regular followers and viewers. I need to give an extra special welcome to all my new subscribers and followers. And because the numbers are climbing really quite fast this evening, given the seriousness of what we're talking about in this evening's video, there are a few things that bear repeating. So I've had 25 years working behind the scenes of a estate agency as a technology provider to estate agents. It's given me a unique insight. My vision, my ultimate vision, is a home for everyone. My mission is to make moving easier. And both of those two things are the case no matter what's happening in the housing market. They just remain my vision and my mission. But with the market turmoil we're going through now, everything's getting more difficult for people who want to move home or get into a home. It's getting harder than it's been for a very long time. And the primary purpose of this channel is not making market forecasts, but is providing information to help people with their moves. And in this current market, helping you hold on to homes if there's a potential risk that you might lose them. So there's a lot to go through. I would like to begin by addressing the fears of people who've got mortgages, who've got mortgage rates coming to an end, and who are worried about being able to afford their new mortgage payment when the fixed rate ends and the increased rate is applied. If you are in that situation and you're worrying about it already, then what you must do as soon as you can is talk to an independent whole of market mortgage broker. If you already have a mortgage broker that you trust, go and talk to them and say, still got 6 months till my rate ends. And at 6 months or less, you can already change your rate and switch to a new rate if you want, or get one locked in, ready for when your low rate ends. But there are a lot of people who are very, very worried about this. And I can't help you guys other than to say, rather than worrying whether you will or won't be able to afford it, find out as soon as you can. And there's an extra reason for doing it sooner rather than later, which is despite the fact that the Bank of England base rates reached 5% today, and that mortgage rates haven't gone up hugely on the back of that because it was already priced in, it is priced into the market that interest rates will continue rising. The base rate will continue rising to nearly 6% this year. And so mortgage rates are likely to continue to creep up a little bit further. And therefore, securing your next rate is worth doing sooner rather than later. So if you are someone who's becoming increasingly concerned about the affordability of your mortgage payment when it goes up, now it's very important this. Don't just talk to your bank, because they've only got one set of products. Don't just talk to a broker who only represents certain lenders. In a market where the number of products is reducing, the number of mortgage products is reducing, and where criteria are changing on an almost daily basis, in order for you to maximize the chances of getting the best possible new mortgage deal for yourself, to improve the chances of you being able to stay in your home and afford it and keep it, for those of you who are worried, then that's why you need to talk to a whole of market independent broker. All right. Now, if you know one you trust, that's who you should talk to. If you don't, then you've got to try and find one. And if you can't find one, then talk to my guys, which you can do by popping your details in on this page here. mhwc.co.uk/mortgage. But that's only as a backup in case you can't find your own one or you don't have your own one already. Okay. So for those of you who are mortgage payers, who are worried about your low rate fix coming to an end, or you're already on a high rate, you've got to talk to your mortgage broker and find out what your situation is. Now, if your situation, after you've spoken to your mortgage broker, if it transpires that you might not be able to, or you're worried that you're not be able to, or you're actually quite sure that you simply can't afford what your new mortgage payment is going to be, then I cannot urge you strongly enough to move very swiftly. So if after conversations with your independent mortgage broker or your independent financial advisor or whoever, your partner, whoever it needs to be, you come to the realization that your new mortgage payments aren't sustainable for you, that's when you need to move sooner rather than later to talk to an estate agent. I'm talking about whether or not you have to, maybe you're going to move out, rent it out if your mortgage terms allow that to happen, to research your options. The point is, don't wait until it's too late. Be a step ahead of whatever the situation is. Hopefully you can remortgage and get yourself sorted out with something that is affordable that helps you to keep your home. But if not, you're going to have other things you need to consider. But the most important thing is what's going to happen in the market, what actually has already begun happening this month, which I'll come on to in a minute, and what's going to happen more later this year. You will wish you had moved sooner. You'll wish you had acted sooner. So act soon. If you are a worried mortgage payer, act soon is what it was my strong suggestion. Act soon. Talk to who you need to talk to. If you discover that your situation is not sustainable, then start to explore your options at that point. Okay, but don't wait. You don't need to wait. Act now if you're worried. Okay, so that's point number one. That's for people who are mortgage payers. Not people who are looking to move, people who are mortgage payers worried about the new increased rate. Second group of people are who I'm calling movers, relocators. Forced relocators, not forced by finances, but forced by life. For whatever reason, you are perhaps currently trying to move home, trying to sell a home somewhere and buy a home somewhere else, but life is requiring you to relocate your home. If you are in that situation, then we are now in, and if not already, then very shortly coming into what will be the most difficult time to move home that there's been for a very, very long time, like 15 years. And I cannot stress this strongly enough. You need to handpick your team, your moving team of professionals, with enormous care, because so many things are happening because of this bank rate increase, because it's higher than anyone expected, because mortgage rates are higher than anyone expected. There are transactions falling through, there are chains breaking up through nobody's fault, right? Because of external factors affecting things, okay? But your choice of agent, your choice of mortgage broker, your choice of conveyancer, all of these things become critically important decisions. And you've got to make those choices as though your move depends on it, because it does, okay? And yes, in the last few years, estate agents have, generally speaking, had a relatively easy time of it with a very strong rising market. That ship has sailed, and in most places, I know there are exceptions regionally, there are some places where markets are still strong, but generally speaking, in most places the market is turning. I had a long conversation yesterday with an agent who revealed to me that their fall-through rate has doubled between May and June. The number of properties coming onto the market is going up. The number of new deals being agreed has dropped in half. In other words, all metrics are pointing towards a big increase in people trying to sell, less people buying, therefore harder to get deals done. And so if you're someone that needs to move because you need to move, this is when you must seek out an experienced agent, someone who's been around the block a lot of times, someone who's been there 20, 30 years, who's been through downturns before and who knows how to get these deals done. Do not make the mistake of just picking a cheap agent. You will have a nightmare. You will have a nightmare. You might get lucky, but you will most likely have a real problem if you pick an inexperienced agent that doesn't know what they're doing. Okay, so that's relocators. Basically, choose your moving team of conveyancer, mortgage broker, and agent like your move depends on it, because it literally does. And last but not least, first-time buyers. It's a personal assessment every single time. It depends on lots of things. Obviously, your finances, your current living requirements, and how badly you want to move for non-financial reasons, how badly you want to own your own home. And it also depends on what your risk assessment is. But if you can afford a home, comfortably afford a home, and you really want one, and you're going to be staying in it for quite a long time, you should still buy. There's no point in waiting just to save a bit of money if you can comfortably afford it. If you've got a nice big, as in 35% or more deposit, and you're expecting to stay in this home that you want to buy for at least 8 years, like certainly no less than 5, but better 7 or 8 years, move, buy it, get in there, right? Even in the market downturn like this, there are still, instead of 80 to 100,000 people a month moving, there are going to be 40 to 50,000 people a month moving, but there are still 40 to 50,000 people a month moving. So there is a market, and there are people that have to move. There are people forced to move for all of the life reasons, okay, which I won't go into now. But if buying a home means you can move on with your life, you don't want to wait just because the market's falling, all right? Because is it worth putting your life on hold when there's a home you want to live in and you can afford? Just don't overpay, okay? That's a big decision. Overpaying is different for different people. Some people overpaying depends on the size of their mortgage and their risk appetite. Other people actually have got a much bigger deposit, smaller mortgage, etc. So the overpaying risk changes depending on your individual circumstances. But for anyone with a high loan to value mortgage looking to buy now, I'm not saying don't. I'm saying it is the riskiest time to do that right now. It is the riskiest time. I don't need to tell you this. You all know this already. And already it's quite clear that first-time buyers who don't have to move or don't have to buy are being much, much more cautious about it. And that makes sense. That makes sense. So, okay, right. It says in the title that Stig was going to be on this evening's video. And I'm delighted to tell you that I'm actually sitting here with Stig right now. He's sitting opposite me. Good evening, Alex.
Good evening, Charlie.
How you doing, right?
Yeah, well.
I'm not. I'm hungover because of you.
I don't know how you
Because
can
you and
blame
I
me.
went out for a quiet beer last night, and I feel like I've been on a 3-day bender thanks to you, and it's absolutely hanging, and it's horrible.
It's not my fault that you're
It's
a lightweight.
entirely your fault that I'm hungover. If it wasn't for you, I wouldn't be hungover. So therefore, it's definitely your fault. Now, can I just ask you to answer in your own words? You don't ever answer in anything else, I know, but explain to absolute beginners why the Bank of England is breaking everything. Not their reasons for doing it, but why what they have done with raising rates is going to lead to stuff breaking in a couple of minutes.
Okay. The only tool the Bank of England has to combat inflation is to raise rates or lower rates if inflation is very low. They are obviously raising rates at the moment. That has a knock-on effect in a whole bunch of sectors. The first thing, obviously, is people with mortgages. You've got a debt, and indeed any debts, whether it's secured on your house or separately, you will notice that interest rates are rising, and they will rise faster on the debts that you're servicing than they will on any savings that you have, because banks are very good at making sure they maximize their profits. This will mean that you have less money to spend in the economy. So that's one piece. you're already having to spend more because of inflation. So you're getting less as individuals. You are spending, let's say, the same amount shopping, but you're getting less food for your shopping. The supermarket, in turn, it has debt. Most of these companies out there have borrowed money in order to grow in previous times because money was cheap. Their chief financial officers have said, well, there's no point using our own capital. Much easier to use somebody else's. Money is so cheap. So they also are in the same position that homeowners with mortgages are. They will be coming up to get their debt again restarted. And strangely, it'll be at a much higher interest rate. This will impact companies. So companies are getting a triple whammy, because taxes have also gone up. So taxes have increased. Customers are buying less volume of goods, and they are, in turn, the companies are having to pay more for the supply of goods because of inflation. And at the same time, the debt that they have is costing them more. The natural next step for that is they will look to cut costs. They will look to improve efficiency. And the way they do that is they sack people. And then we will have more people unemployed. And unemployed people find it very hard to A, pay tax, and B, service their debts. So we'll start to get defaults on debts. Also, the tax take for the government will be lower, because as people lose jobs, rather than contributing to GDP, they're actually taking out from universal credit. And the government has another problem, because unlike 2007, where public debt was actually very low before all of the QE, they now have vast debts, which we were servicing at relatively low interest rates. But of course, those rates at the bond market, the gilt market, have gone up. And therefore, the government, as its tax take goes down, and yet its spending increases, further increases its debt, which it has to service. At that point, we potentially could default on our debt. So in the same way that a person might default on their mortgage, and the bank could turn around after forbearance, whatever, how long it takes, and repossess their home, you can't repossess a country. But a country can default on its debt. And if it does, it would be downgraded by the rest of the world in order to receive new investment. So therefore, there would be no investment. And we end up becoming basically a third world nation. On top of that, you have to understand that our private pensions, and indeed the stock market, are also tied to the health of our economy, of our companies, and indeed investment coming in. So when people have less money and buy less volume of goods, it affects everything from food through to, let's say, iPhones, the luxury items. Now, at the moment, luxury items are holding up very well, because our nation is divided between those who have a lot of money and very little debt, and unfortunately those normally younger who don't have very much money but do have substantial debt in things like mortgages. As we stop buying fewer goods, the value of the company will go down. So whether that is Apple, or whether it is one of the building companies who are building a Taylor Wimpey, for instance, who are building less houses because there are less people who are able to afford them, all of these things have a knock-on impact. So you will start to see the stock market will fall. That will then have an impact in terms of pensions. Eventually, the Bank of England raising rates will literally break everything. Now, at that point, they have to pivot. As a lovely American, they want to pivot. But you don't want to pivot before inflation is beaten.
Right.
And this is the problem they have. The Bank of England are on a knife edge. They know that they want to continue to raise rates to be seen to be fighting inflation. Whether that is working or not is a separate debate. Let's not have that one now. But at the same time, the more they raise them, they know. I mean, it's a deliberate part of the policy. They will create more unemployment. They will break things. That's what they're doing to stop you spending. Andrew
Bailey actually said today, I don't know if you saw the clip, he said these wage price increases are unsustainable and we must stop them.
Yes, they need people to stop getting wage increases to be poorer. If people keep spending in the economy, inflation won't go away. So you could all of you listening, you could save yourselves some time and money by just not buying stuff for a while and keep your cash, buy a bond. You can probably get a 4.5% return on a bond at the moment. But do whatever you want to do, but don't spend the money in the economy. And maybe the Bank of England will stop raising rates a bit quicker. It would require a lot of us to do that. But that's what they're trying to do. So unemployment realistically is part of the whole process. And the issue is it takes a long time for interest rate rises to be absorbed by the economy. And so there's always the possibility and indeed the likelihood that you will raise rates too high and you'll do too much damage. And then, of course, you enter a recession, which is much worse than it needed to be, because you're still feeling the impact of the higher rates, even though they have then been reduced. So it's okay.
So it's going to break everything. I get loads of people are going, turn the monitor off in the background. Turn the monitor in the background. No one has noticed what film it is.
Oh, they had no. They did get it. The Big
really?
Short. Sorry, that's my fault, guys. I thought we had Trading Places last time.
Yeah.
I thought this one was good.
There are a few people going, turn it off. Turn the monitor off. Is it really that bad, guys? Is it?
See,
I can if you really want me to.
I thought you were pretty enough, Charlie. Obviously, Christian Bale with his glass eye is just too much for them.
Okay, happy everybody. Killjoys, all of you.
Yeah.
I thought it'd be fun to have that on the background. The Big Short, for anyone who doesn't know, which we thought would be a
fantastic film.
Yeah, an appropriate film to have on in the background for this evening's discussion. So, what's the market going to do next? I mean, the housing market. Now, first of all, especially for all new viewers, let me just remind everybody that unlike the stock market, a stock market crash happens in a day, doesn't it?
Yeah, it's very fast. Yeah.
So stock markets, any of those electronically listed tradable things, the price can move unlimited amounts in a day.
You only have to look at 2008, 2009. Yeah. You see how fast things change.
Property moves even during periods that are subsequently referred to as a crash. At the time, it feels glacially slow.
Because it takes a long time to buy or sell a house.
It's between the process from beginning to end is between 12 to 18 months between someone deciding they want to move and that transaction finally being reported and published in house price figures.
You mean it's not like me buying Apple shares, which takes me about 3 seconds on my iPhone? Okay,
exactly not. So we have not. The most recent month we've got data for was April. Land registry data came out this week for April, which confusingly said, "Oh, house prices have gone up 0.5%." Remember, April figures. But actually, it's in 7 months. They've been down in 7 months. It's 1 month, and it never goes all the way down a straight line. We don't yet have any visibility of what's happening at the coalface in terms of any of the house price indices. Now, it is my view, and I'm continuing on my view from that I started talking about this time last year.
Yep.
That we are just entering the second phase of the 3 phases of a downturn, which is the first phase is, stops climbing, starts to come down a bit, starts to come down a bit.
No one believes it.
No one believes it's happening.
Yeah.
As per the Twitter poll, I share it with you. This is quite interesting. There you are, guys. Can you see this?
Is this an old one or
no? This is today. This is today's Twitter poll. Where do you see average nominal UK house prices 2 years from now? 10% of people think they'll be the same or higher than last year.
Good luck to them.
You are optimists, you guys. But nearly 90% of you see it lower. 70% of you are 10% or more. And I can't quite see.
Well, most of the mainstream media has now accepted 10%, haven't they?
Yeah. And again, that's like that's the worst they could admit to.
That's the bare minimum, and yet it is the worst they will admit to.
It is the worst. So, because in fact, 32, so 68% of you think it'll be more than 10% price falls.
We do have something of a biased audience.
Yeah, that's true. That's true. It definitely is a biased audience. I know that. But still, and then on YouTube, it's a similar spread actually. 10%, again, 10% of you think it's going to be higher. 43, so 74% of you think it'll be a fall greater than 10%. And 31% of you think a fall greater than 25%. Well, when we finally get the official figures for transactions being agreed in June 2023,
Yeah.
which will not be registered at the Land Registry until September, October,
Yeah.
and will not be reported for another couple of months after that, December. So we won't know until January
No,
2024.
And that's the big problem.
What the prices are actually being agreed at the coalface today.
Yeah.
So let me tell you. Because with my access to the agents that I talk to, the CRM systems that I see, and the numbers that I'm hearing from people I'm talking to, I think you will see that house prices are already off more than 10% from their peak.
Yeah,
Once the reporting lag catches up, somewhere between 12 to 14% is where they are now, already off their highs. Phase 2, which everyone, you can tell from the whole media, no one is out there saying, no, house prices aren't going to fall. Everyone's going, okay, they really are going to fall now, right? So this is why in the last few weeks, even before today's news, agents have seen a lot more property coming into the market, a lot more price reductions, a very, very high number of price reductions. And in the article that I wrote in the Times in January, and here it is on your screens for your viewing pleasure, I just want to be clear. I was not responsible for that headline, okay? Forget 2023, wait until 2024 to buy a house. But I talk about how it'll be the year of remorseful home sellers chasing the market price down as it falls, wishing they had taken a smaller price hit sooner. When the cold, hard reality of the 2023 property market metaphorically slaps them in the face, they'll be forced to accept a much lower price much later than they would have liked. And I wrote that in January.
Yep.
And arguably some things have got worse than that. But this is talking about how much harder it's going to be to actually move house. Right? It's going to be much, much harder because when there's less people actually transacting, the number of transactions is lower, you've got fewer buyers and sellers. It's going to be very, very difficult. So phase 2 of this house price downturn, I'm calling it the slide. It's actually a slide shape.
Yes, exactly.
Right? Is going to be the steep. And
it's not a cliff.
No,
it is a slide.
It's not a cliff. It's a slide. But we're going into the steepest part of the slide now,
Yeah.
which will last for the next 12 months or so.
At least a year.
Okay. And then the falls will start to slow.
Yes.
And when it becomes clear with the data, for example, how the stock levels, the sheer number of properties coming in the market compared to the number that are selling, and it becomes clear that there is an avalanche probably for sale, you're already too late.
Yes. Yeah. Your price is already going way down.
If you're still hoping to find a buyer at that point, you are way behind that curve, literally.
But it's the advice you've been giving for 9 months now.
I have.
Get in early, go in. If you've got a good agent, they will come in reasonably priced, as in lower than the market value, to get bidders.
Yeah. So you must, if you must sell, make sure your property's asking price is lower than people expect it to be, and you will sell your house quickly if you do that.
Yeah.
Now, shall we take some questions?
Oh, I'd like to cover the one about stress testing, because I think there's a lot of misunderstanding there.
Okay, so just talk. I'll talk about the mortgage stress testing. You talk about the Bank of England stress testing.
Yeah,
right?
perfect.
So 2 different kinds of stress testing. Just remind everyone, I'm not a mortgage broker. I don't give financial or mortgage advice, but this is just common public knowledge if you want to look it up and find out.
Yeah.
So until August last year, the Bank of England required mortgage lenders to stress test their borrowers to see if to check that they would be able to afford their mortgage payment if the interest rate rose by 3% over the rate that they were getting the mortgage at. So if you had a mortgage deal at 2%, you would have been stress tested to check that you could afford your payment if it got to 5%. Now,
two things there.
hang on, sorry. It was 3%, and then it was lowered to 1%.
In August of last year, they actually did away with stress testing completely. They said the multiples of income is still 4.5 times.
Yeah.
They kept that.
Yeah.
But there is no stress testing and hasn't been since August of 22. However, the recommendation was they would have a 1% So
Right.
you would add 1% to
Yeah.
whatever you were looking at
Yeah.
to see if it could be afforded.
But just a recommendation, not a
Just-
requirement.
No, correct, not a requirement. But you've got to remember, like when you're selling your car, I bet your car is polished and gleaming more than it has been at any point in the time that you have owned it.
Yes.
That's what people do when they go and apply for their mortgage. They make sure that
Yes.
their last X months of bank statements are perfect.
Yes.
They make sure that everything is squeaky clean, and no, they haven't taken out that silly thing for the iPhone that's going to cost them for too much. So even though they were stress tested,
Yes.
they were stress tested at the best of times.
Yes.
The fact they were only stress tested at plus 3% on, let's say, a 2.5%. I mean, it was common to get a 2.5% mortgage.
Yeah. Yeah.
So they were stress tested to 5.5%. Well, guess what?
We're already at 6.
Yeah. So
Yeah. Yeah. So in other words, a 2-year fix, the average 2-year fix is now over 6%, which is higher than most people's stress tests that were done
correct.
just a year ago.
Exactly.
So now I want to talk about repossessions.
Should we do the Bank of England one quickly? Or
Bank of England stress test.
Okay, so there's a lot of
Is
confusion.
that relevant for movers right now, though? No, this is relevant for a later discussion.
Exactly, but it'll remove the confusion because they're
Okay. Yeah. Okay.
So we've just discussed mortgage stress testing.
Yeah.
A lot of people get confused. They talk about, oh yes, but with stress testing, house prices will crash. So the Bank of England itself did a stress test of banks. It was a bank stress test, and they tested up to 6%. This was totally hypothetical, what they believed would happen.
In September, wasn't it?
Correct.
Yeah, yes.
And what happened, and you can look at this on the Bank of England website, is they believed that if interest rates rose rapidly in the beginning of 2023 to 6%, well, that seems weirdly prescient.
Yes.
House prices would fall, they predicted, by 31%. Just want to let that sink in.
So the Bank of England's
Correct.
own stress
Stress
test
test.
prediction
Yep.
was that house prices nominal would fall 31%.
Correct. And unemployment would reach 8.5%, which is as bad as it was at the worst year of unemployment after the 2008 crash, which was 2011.
Right.
Just, you can look it up on the Bank of England, not
Yep.
fibbing, but those are two totally different stress tests. One was individual mortgages.
Yes.
This was a Bank of England exercise on a piece of paper,
Yeah.
hypothetical in 2022 to see what happened if interest rates went up.
So, guys, what we're saying here is that based on what the markets are expecting the bank base rate to do, the Bank of England's own stress test scenario of what happens to house prices if rates reach where they have reached is that they'll fall 31%.
Yep.
Right. Now, again, for those of you who knew, my situation is my position on house price falls has always been that there will be an average fall from the peak to the trough of prices over however long that takes of 35%, with regional variations between 15 and 50% drops. Okay, so in other words, I think the smallest drops any region will see will be 15%. Those will be the areas that everyone's moving to for some reason.
Yep.
And the areas with the biggest drops will see up to 50% nominal falls on house prices. Now, I know there are still people who just cannot get their head around those numbers, but yeah,
No,
we're on track, right? It is happening exactly as I expected to. I said peak to trough over however long it takes. It genuinely surprises me how slow the market has been to actually pick up on what's happening. And it's taken the sort of metaphorical slap in the face today of the Bank of England before people are finding. Even Russell Quirk is starting to acknowledge that he may have been wrong.
Russ.
He may have been wrong, but not very wrong so far.
You gotta love Russ.
Oh yeah, I do. I love him. He's a cracking bloke, but he has some very, very, very bad ideas.
Can I suggest he has issues?
No, you
No.
can't. You can't suggest that.
That's a shame. Can I
No,
actually-
we never get personal ever.
Okay.
Oh wow. Okay, we got an agent on here, Andrew Simmons, who's a previous guest. I've had more market appraisal requests today than any other. No other reason than because they're concerned. We will have too much stock.
Yep.
So I've had feedback from some agents that some people have gone around, viewed a property, and then made an offer of 20% below because Charlie said house prices are going to fall 35%. Please don't do that.
It's all your fault.
Please, you cannot invoke me as the reason for your offer on a specific property, okay? Ever. You can't do that.
It's like Dungeons and Dragons. I invoke Charlie. I've
Yes.
just rolled a dice.
No,
Fantastic.
he said it. So that's not how it works, guys, because every individual property has its own market, and every individual property has its own unique asking price that, depending on the agent, might be a very good, fair, accurate asking price, or might be a ridiculous pie in the sky 25% over asking price. And you never know which it's going to be. So you can't just come in at X% below asking. And if you do, when it's a fairly priced property, you'll lose that anyway, because people will pay asking price if it's been fairly priced. But there we go. 35% peak to trough. I'm expecting the bottom. And again, when the trough happens will vary slightly on region, right? So London usually moves first and fastest. And so London will probably stop falling before other areas have. There'll be regional variations in when the market hits the bottom. So when you say the housing market, there isn't a housing market. There are countless little local housing markets, okay? And they all operate with different dynamics, different prices, different markets, different timings. So you cannot generalize about homes where you're looking based on what I'm saying about national averages. Okay, so you've got to get to know. And the only way to do that, by the way, is to go out and view. If you get out and actually view as many properties as you can, you'll get a real feel for what's happening in that market.
Although it's worth saying, I mean, all of that 100% true, but it's worth saying, if you were to treat the Midlands as like the belt around the waist of the country, anywhere south of the Midlands has basically been unaffordable for a very long period of time. North of the Midlands, not so much. In fact, the recoveries from 2008 in some places have been almost non-existent. So you can say, although you can't comment on a specific individual market without looking at that market, that in general, most of the falls are going to happen from the Midlands down, the higher percentage falls.
Guys, please understand something, right? None of the indices on their own tell you what's actually happening. They are indicators. They are approximate indicators with a lag, all of them. And the only way to know what's happening at the coalface where you want to live is to be out there viewing and talking to agents. It's the only way to do it. Now, who's got questions? I'm specifically looking for questions for people who are either worried about paying their mortgage, or worried about their move, or holding their move chain together, or first-time buyers who've had an offer accepted and they're worried about it. Mover questions, please. What we're going to do is, after this video, when this video finishes and we've had a short break, we are going to have another live stream straight after this, where
I need more gin. I thought we were recording that one.
There's a bottle over there.
There's no tonic.
No. We'll just go live and we'll have a free-flowing conversation about the economy, because
that sounds like fun. Okay.
We'll just take questions and discussions, because of course it's one of the considerations people are considering when deciding whether to buy or not, because they want to know about how secure is the jobs market going to be, how secure is the economy going to be, because actually if I'd known what the economy is going to be like, it might have affected my decision now or not.
Yeah, sure.
So questions, please, everybody. And it would really help me if you could actually put questions to help me.
There's a lot of comments coming in.
Yeah. Move question. Any tips for moving services? What prices are fair? No, I can't give you that, Dom96. I'm afraid I can't give you quotes. Charlie, I've just purchased a house. Can I ask for a refund?
60 days. If you bought it on Visa, I think you're covered.
Now look, AMA dates. Agents are not vampires. They're not vampires. Agents are lifesavers in a market like this when you need to move. Richard Tomes says, first time buyer, how long do we wait on the sidelines until committing in the current climate? You only need to find, unless you want to live in more than one home, you only need to find one home with a motivated seller. And there are two ways of doing that. Either you get out there ahead of the queue and view and invest that time to be the first one there when the seller goes, actually, I'll sell this cheap. Or you wait until you think the whole market's like that, by which time everyone's out there getting cheap stuff and you've had to wait longer. So I can't answer that question, how long do you in the sidelines, because I don't know what your deposit is. I don't know whether you've got a mortgage. I don't know I don't know anything about your situation, your reasons for buying. Are you single? Are you a family? Have you got children? Do you need to be in school? All of these are reasons I can't answer that question. But what I would say is, if you think you are in a financial position to buy and you'd like to move, be out viewing, because there's no risk or commitment just to going and viewing properties. But if you're viewing properties and you find one where the seller is motivated enough, and believe me, there are going to be more and more motivated sellers soon, then you'll know how long to wait on the sidelines. Because how long to wait depends on finding the right property. Hope that makes sense.
There are just too many questions coming in too fast.
That's okay. I'm just going to pick them. What is the press? No, I just want to stick to moving questions at the moment. Abigail Smith, this is a rate question. Do you think that 5% is the lowest we will see going forward? If you mean the base rate as opposed to a mortgage rate, you think it'll come back down to sort of between 3.5 and 4.5 is where it'll eventually settle.
Correct. And it may even go below 3.5 for a short period of time as we recover through recession.
Right. But that's probably a couple of years away.
Yeah. So mortgage rates would potentially be under 5%, but not by a whole hell of a lot.
As all 74 says, speak about repossessions. Okay. So I do want to talk about this. This is very important. I don't understand why so many housing market commentators are saying, oh, there won't be repossessions like there were last time because there's going to be more forbearance and there's stress testing and the banks are more careful and blah, 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 blah. There have been a couple of very minor material changes in the requirements on banks as far as repossessions come. One of them was that banks are now required to consider switching to interest only or switching a product or extending the royalty. Yes. Whereas before it was recommended that they consider that, they're now required to consider it. But they're only required to consider it. So they can go, I've considered it, and the answer is no.
No. Yeah. 100% no.
And, forbearance sounds lovely, but it's a non-specific, vague, nebulous thing, right? It's just sounds good. And unless the government changes the law to prevent banks repossessing properties when you haven't kept up your mortgage repayments on it, there are going to be repossessions. Okay? I have asked and asked and asked for evidence, and all I've seen is very, very slight, as far as I'm concerned, inconsequential changes. Yep. And don't get me wrong, I agree. Banks do not want to repossess your home. They don't want to. If it gets to that point, then their relationship with you as a customer has failed them, and they are now very much in the red on your transaction. They will always, and they always have tried to do everything they can to keep you going. And if they think there's a chance of you paying, they'll leave you in there because it costs them a lot less money to do that. It's in their own interests not to repossess the property unless it's quite clear that you just have no chance of paying the mortgage. But as soon as that becomes clear, you might get a payment holiday. You might get, but like whether or not they give you payment holidays likely depend on things like why you can't pay. If you can't pay because you've lost your job and you haven't got another job, then they're not likely to give you a payment holiday.
No, the FCA guidance, I just had to look it up as we're discussing it. Under their article of dealing fairly with customers in arrears or default. When dealing with customers in default or in arrears, difficulties, a firm should pay due regard to its obligations under Principle 6 to treat its customers fairly. Should pay due regard, not you will allow them to stay for however long they want on interest only with a payment holiday. I don't get it. I haven't found, I've been looking for the last few days to find anything legal which forces banks.
No, there's nothing. I haven't seen anything either. So I don't agree or accept all the people on TV saying, "No, forbearance.
Yeah, it'll be fine.
It'll be fine." There aren't. Now, repossessions may or may not get up to levels seen in the past, but they are happening already at the moment. Very small numbers.
Yeah.
They increased 50% from a very small base.
Exactly.
But they were already increasing the last time they were reported.
Yep.
And I suspect you're going to see another increase, which means that repossessions are happening.
Yes.
And they're going up. And so all I'm saying is don't take any false comfort from this forbearance word, okay? It'll be down to your personal circumstances. If they can sell you a longer term mortgage, they'll be only too happy to do it, because guess what? They'll make more money. If they can put you on interest only, as long as interest only is great because it means you're not paying off the loan. They're just getting their interest. You still got to pay back the principal at some point, right? So none of these things are actually solutions to the problem where it's just you just can't afford your mortgage.
And they will all cost you more money in the long run.
Yeah, they will. Lewis Oliver says, will base rates hit 7% before year's end? I know Alex has got an answer to that, but what I'll say to this is I don't think they'll hit 7% before the end of this year, if at all. But if they do, it's horrific.
We're all doomed, I tell you.
Yeah. So no, but they could well hit 6% before the end.
It's possible. Yes.
Which was unthinkable 6 months ago.
Well, yeah.
Paul McIntyre says, why are agents telling buyers to piss off? I didn't know they were.
No.
That surprises me.
Which agent is that?
Were you rude to them?
Yeah. That would do it.
Can you elaborate on the question, Paul? Which agents told which buyers to piss off and why? And then I can answer the question. PH says, no questions. I'm a smug know-it-all.
You'd fit in well here.
Hey guys, do you think it's the government that's ballsed it up or external uncontrollable factors? I'll go first. The government and Bank of England policy making for the last 15 years is why we are where we are now.
More than 15.
But certainly since the 2008, since then it got worse.
Yes, 2000. Yes, but since about the mid 90s, and in fact, you can go back even further than that. It's just everything has been short term. Whether it's everything.
Yeah.
This
is a good question. Prasanna Krishnan says, I've got an offer accepted for a buy-to-let, not exchanged the contract yet. Is it possible to renegotiate? So it's always possible to renegotiate, hypothetically, right?
Yeah.
Not even hypothetically.
Until you've signed the contract.
Until you have exchanged contracts, it is always possible to renegotiate. Should you renegotiate, yes or no? Do not even think about renegotiating unless you are prepared to walk away if they refuse. Okay, you should only renegotiate because you are now no longer willing to pay the amount you offered.
Yeah.
Okay, because if you try just because you think, oh, the market's looking bad, I could probably chip them a few more £1,000, there is a very high chance that stressed sellers in an emotional situation are going to react very badly and go, fuck you.
Yeah, out of here. Yeah.
And then you're going to go, oh, actually, I would have paid that. So if you're just being cheeky, trying to chip people and renegotiate, no, it's if you would mind losing the deal, then it makes no sense to renegotiate. However, if you are no longer comfortable paying that amount that you've originally offered, then you must renegotiate. And you must say, this is the new price, which is the maximum I'm prepared to pay. I understand you may not accept it, but if you don't, I will be withdrawing from the transaction. And you've got to mean it, right?
Yeah.
If you bluff, you may or may not get away with it, but there is a real chance you lose the deal.
But also it makes you a bad person.
I'm not here to judge anybody.
Can I do that?
Yeah, there's this. I'm just scrolling through to find more questions. Have bad day says, I am so invoking moving home with Charlie when I sub 20% off.
Remember, you have to tap your chest twice and then put two fingers in the air.
Yeah. Guff Disregarded says, do you think you can get a reputation with agents for being overly fussy / difficult if you view without buying anything? Not in this market.
No. The fact that you're out,
and there is I think I can remember a time when it was an average of 14 viewings per sale.
Okay.
In certain areas.
Yeah.
And agents are very used to people viewing because you may not like it, right? The whole point of viewing a property is to decide if you even like it or not. So, and also viewings help agents to get the sellers to reduce the price.
Yeah.
The more people that view a property without making an offer, the more ammunition the agent's got to go to the seller,
The
because
easier
you
the
need to
argument.
drop your
Yeah,
price.
exactly.
Okay, so no, don't worry about it. As long as you're doing it in good faith, right? As long as you're not just being a nosy Parker and going around.
I want to
It
go and look-
happens.
I want to look in people's houses.
Yeah.
Only the
Oh,
expensive
no,
ones.
there are people who do that. It's terrible.
What a strange
Um,
life you'd have to lead to do that.
I know. Okay, so Paul McIntyre, the one who said, why are agents tell people to piss off? The agent said we achieved X last year, so no offers. There are two reasons that agents will reject offers. Okay. Number one, because they genuinely have better offers that the client's already turned down.
Oh.
Okay. So if the client's already turned down £250,000 and you offer £240,000, they're going to say,
No
there's no
point.
But there are also some very stupid agents
Mhm.
out there who have agreed a price with the seller that they're going to get.
That's what they're going to get.
And it's too embarrassing for that agent to go and say, this is the only offer I've got. Yeah. And some of those agents would rather save face and not tell the seller about the offer, even though they are required to do so.
So, and this is something I've always wondered as noticing. Would there ever be a time where an agent's told you they're not even going to put the offer to people, or they're not allowed to do that, but they've said they're not going to accept it? Would you ever put just a handwritten note through a door to say, look, I've seen your property, I want to offer you this much, and just put that through?
Well, if you think you're dealing with an agent that's an idiot,
Well, that's what I'm
right,
like.
and there are some who are, not all of them, but some who are, and you genuinely think that you have a chance of offering it, then you certainly can't hurt you to do that.
Okay.
There's nothing to lose, is there?
No. Well, I mean, that was my view.
Putting the notes with letterbox, there's nothing to lose from that. Right. Sorry, God, there's so many. It's just like there's a lot of you here.
Yes,
They're approaching 1,200.
There's so many questions.
Question just got off from my YouTube. Okay. Kay on YouTube says, question, just got an offer on my 2-bed flat in Liverpool, which I think was up at a fair price of 70k. The offer was 68k. I think I'm going to take it, question mark.
Yes, that seems like a good idea.
If this is your only offer in this market, I would confirm without delay that you're accepting their offer.
Yes.
So what you can do, what I recommend you do, is that you ask them for the commitment of saying, please buy your search packs immediately. Now, in all seriousness, a buyer should do that. You're going to a buyer, if you're buying with a mortgage, has to have search packs to satisfy the lender's requirements anyway. And these search packs are the number one cause of avoidable delays during the conveyancing process. Okay, so as the buyer, you can speed that up by getting it. Now, you can do that through your conveyancer if you've already got one, and you can say to your conveyancer, order my search packs today.
Yeah.
Right? I've had my offer accepted, order today. If you're a seller, you could say, I will accept that offer on the condition you order your search packs immediately today. And you can do that with my guys, of course. The only guys actually who do this. So mhwc.co.uk/property pack, and you can get them direct from me, and your conveyancers can use this. All the details on that page for the conveyancer to check out. Thank you for giving me the opportunity to plug that. But yes, accept the offer. I would very, very quickly accept that offer. Question, first-time buyer. How do you define what is a fair price? Are there things to look out for? We are a first-time buyer wondering what is fair. Toyosi Maria B says, and well, if there are other people offering on a property that you're offering on, that there's already a market for that property, and either you're going to have to meet the market expectations or the other people bidding, or you're not in the running anyway. But if you're the only person offering, it's not about what's a fair price. It's about the price you are comfortable paying, the maximum price you're comfortable paying. Don't try and chip it to save a few quid. If you love the home and you want to live in it and you're the only offer, make the offer that is your maximum comfortable offer, taking into account your personal situation, your job security, your finances, how soon you need to move, whether you're going to be exposed to the risk of negative equity, which would stop you moving if you had a large loan to value. So it's not about fair as much as it is about what's your maximum comfortable price. You can only make your offer. They can only accept it or deny it. But when you are making offers that are below asking price, first-time buyers, always have your conveyancer lined up, your mortgage in principle lined up. Really, really important, because, and say, if you accept my offer, I'll order my search packs today. That's money out of my pocket, committed to the transaction today. That will get your offer accepted above anyone else offering the same amount, right? If you've already got a conveyancer already got search packs, and you say that, you're going to get your offer accepted before other people. What else do we have here? Guys, I'm unable to make regional predictions, I'm afraid. Oh, this is an interesting question. Xanthi Rowland says, if gilts, amusingly spelled G-U-I-L.
No, it is. It's a guilty market. Somebody else wrote that today, and I thought
same
that's
person.
what it should be called.
Same person. I think, Xanthi, you wrote that on Twitter, didn't you?
It should be the gilt market.
If guilty gilts
Yeah.
have priced in 5.75, have then mortgages peaked?
No. Well, first of all, are Bank of England rates going to break 5.75? In which case, mortgages obviously haven't peaked.
Yeah.
But more importantly, you've got to remember that mortgage providers have to be competitive in the market. So although they've priced in the 5.75, they haven't actually raised all of their product prices yet because the Bank of England hasn't raised rates to 5.75. They've raised them to 5%. Yeah. So in order to be the mortgage provider that you choose, and therefore the most competitive on the market, there is still a little bit of leeway and a little bit of play. Yeah. So you will see mortgages increase as Bank of England rates increase over the coming months, but not vastly,
not jumps,
just little bits in order
because the lenders are competing.
Exactly.
Keith Morrison asks, do you think we will see lots of stock coming onto the market now? Yes, but there's a caveat. So on average, in general, there is already a lot more coming on. There's a lot more that hasn't yet hit the market that's in the pipeline coming on now. There are a lot of people thinking, hang on a second, if we're going to have to sell, we should sell sooner. Yeah. And I'm hearing reports from agents and seeing it in the data that there is more property coming onto the market than stock that's selling. However, and again, don't invoke, Charlie said there'll be lots of stock coming on, just because you want to live in a place you can't afford. If nothing I'm saying and nothing the market is going to do will wave a magic wand and suddenly allow you to afford the dream home that's outside your budget. Okay? So I know that there are people expressing frustration saying that, well, the house I want to live in won't come down in price. That's because there's a market for those houses.
Yes.
And there's nothing you can do about that. So there are always areas that are more desirable than other areas where people don't want to sell because they live in lovely houses there. That will not see more stock come into the market. So, and of course, everyone, by very definition of desirable, that's where everyone wants to live.
Exactly,
and that's where everyone wants to see lots of stock come into the market.
It's champagne on prosecco budget. Yeah, the reality is there's nothing wrong with prosecco.
Yeah, house prices falling £1,000 a week. Yeah, on average, roughly. Yeah, I'd agree with that. Okay. Alex asks, can people going on interest only, lengthening term to 40 years, and other shenanigans significantly soften the market crash if inflation drops very quickly by the end of the year? Now, the answer is no, because of this, how slow everything is. Okay. So going on interest only and lengthening a term to 40 years isn't going to make prices go up. It's just going to allow the people who don't want to move to stay in their home.
Exactly.
So
at greatly increased cost, which will then put their retirement at risk in the future.
Yeah.
So, you correctly used the word shenanigans there.
Yeah.
All of these mechanisms that people are desperately pushing in order to prop up house prices, A, won't work, but B, will cause an entire shitstorm in about 40 years' time.
Yeah. Dan Longman says, core inflation increased again. Will it affect the housing market?
Yes. Well, yes.
Because core inflation is actually their biggest nightmare, in a way.
Well, actually, core inflation, no, it won't affect the housing market at all. But the reaction to core inflation will absolutely affect the housing market.
Yeah, because core inflation is the bastard that won't come down. That's going up when no one thought it would be going up.
No, I've got to be honest. I thought that core was going to come just 0.1%, but I had it coming down.
Yeah, and it went up 0.5%.
Yeah.
So, which means
0.3. Yeah.
Did it?
6.8.
Okay. No, it's 7.1.
Yeah, but it was 6.8.
Okay. Yeah. Next one, regarding repossession. Yeah, good point, Jambo. Regarding repossessions, remember, it's the bank's house, not yours, until the mortgage is paid off.
Exactly.
They aren't just going to give it to you. You'll be out.
Or you'll be in on a guaranteed rent term where the bank takes ownership of the house.
Yeah, okay. So, Alex, I'm undecided on this.
It's my conspiracy theory that you don't like.
I don't like it.
I know, I like
It
it.
doesn't mean you're wrong, and it doesn't mean it's not going to happen. I just don't like it.
I don't care.
It
I have no care.
no, but what I mean is, so Alex is expecting the following to happen. When people get to the point where the house is going to be repossessed, the bank is going to come along to them and say, "We own your house now. We won't kick you out, but you're going to sign a 2-year rental contract."
Yeah. Or much longer than that.
Yeah. So you no longer own the house. You just become a tenant, and you can say, so you get to keep your home, just never own it again.
Correct. Nothing to pass on to kids, no inheritance.
Yeah.
But you don't have to pay any negative equity costs.
Yeah, that happens. So I'm trying to find good questions. Toyosi Maria, she says, thanks, Charlie. We've decided to wait a bit longer to build up 65% loan to value instead of 75%. Very wise.
Yes, very
wise. Very wise.
Good
You'll
plan.
get a better rate.
Yeah.
And you will be, that's a very, very wise.
Insulated from the falls, especially by the time you're looking to buy.
What happens to the value of the pound with these predictions?
And that's where we get. That's our next conversation.
Yeah. Okay. We'll come back on our next live stream for that one. We'll go.
Recession or stagflation.
The next live stream video, which I've separated out from this because this video is just for movers and it's moving related questions. But of course, one of the big things is, well, what's going to happen in the economy? How secure are jobs going to be? What's going to happen to interest rates? What's going to happen to all this financial stuff? That's a very big consideration for a lot of people when they are deciding whether or not to move house. Mm-hmm. But so that'll be a separate video. So it's just me and Alex blathering on about economic bollocks.
But I am going to have to go and buy more tonic.
Okay. You have both those cans. Okay. Yeah, we will have time for that. Yes, Rum Shop HQ. What a great
I love his name.
Yeah. Rum Shop HQ. Question: as a seller, can I order the search pack as part of the sale and transfer to the buyer? Yes, but there are elements of the search pack which have an expiry date on them, and you need to exchange contracts before the expiry date happens. So that there might be a small part that needs to be refreshed. Mm-hmm. Some search pack providers do that for free. I don't think I do, actually. But yes, you can do that. And as a seller, it makes a lot of sense because, again, you are speeding up the process. You can say to your buyer, by the way, here's the search pack for your conveyances.
Yeah.
And in case I didn't already put it on the screen, there's the URL where you can get it, mhwc.co.uk/property-pack. Okay, Hugh MP says, should I keep cash in the bank and rent for free using the interest, or buy a house for cash?
What have we been discussing?
It depends.
How big is the property?
It depends whether you want to own it. It just depends. If you're renting,
no.
Hang on, no, wait. I don't care about the financial side of this, right? Because that's a financial question. I'm not answering that.
I know about that.
But it depends if you have you found somewhere that you want to buy that you want to live in. If so, I'd recommend you buy it because loving the place that you live has a value that far exceeds any amount of money that you'll ever fucking make. Right? So
especially if it's a clifftop villa in the south of France
yeah.
with its own vineyard. I mean, that would be fantastic.
Okay. Baz Phoenix says, just dropped the price of my bungalow by 10k after being on the market 3 weeks, trying to get ahead of the downturn. So, first of all, I commend you on dropping the price. It's unfortunate that you didn't price it better to begin with, because now it looks like you're a bit more desperate. I don't know if 10k is enough or not. what I would be doing is saying to my agent, what is the price we need to market it at that you know will get offers? Okay.
Yeah.
Because the asking price is not the price you have to accept. Remember that, okay? You put the asking price low enough, people will bid above it.
I think people are still very scared about putting on a too low and then them having to accept an offer that's too low.
You don't have to accept it.
And that's you've got to get it through your head. Just because you put it on lower, you have more chance of people bidding and actually getting a higher price than the person who goes in too high.
Question from Leo Lees. I got a mortgage in principle from a whole of market broker. However, no interest rate quoted within that. Does this sound right? I was told to get a rate quote once I find a property. Yes, that is correct. Can you see a lot? Okay. My only demand is back to work is the YouTube name. Right. Can you see a lot of investors selling, causing increase of rental market? So, yes, it's already happened that there are landlords selling up, and that is restricting the rental supply slightly, because some of those properties are being sold to other landlords with a tenant in, other ones are being sold to first-time buyers. But if all else was the same, if people weren't losing jobs and the economy was getting tougher, then rent would be. And I know that recently the media's been reported rents are going up. What they're saying is rents are year on year up, which is true. But you can have a year on year increase while monthly they're decreasing. Correct. And I think rents have peaked on average, and we're beginning to see rent falls because people are going to be sharing to save money.
It's multiple markets.
I
agree with you as an average across the country. There are certainly places in London where they are still going up in that micro market.
AW07 says that they're going to assume to agents. Charlie says, I have to disregard your guff.
Seems you've got to get
that'll make a smile. That'll make a smile. By the way, I need to just remind, especially for my new viewers, what that means. Disregard the guff means you don't have to listen to anything the agent says. View the property, decide if you like it, decide if you want to make an offer, put it in, and they'll be going, blah 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 blah. It's just
yes. There's a waft. There's a waft of a bad smell.
So just disregard
or if they're a good agent, it could be a waft of a good smell.
The best agents don't say anything.
Just shut up and show you.
One of the ways you know the real professionals. They literally just wait until you have a question. Yeah, and then they answer your question, and they start persuading you and telling you and talking, blah blah blah. Why are we not helping out mortgages?
You look confused.
No, I'm not confused. These are questions that aren't. They're interesting questions, but not for this video.
Jesus, what sort of videos are you making now?
Matthew Dunn says, question, do you think they will use other tools to reduce inflation rather than just raising taxes? Raising
interest rates.
Interest rates, I think you meant.
Although you're quite right.
You are quite right.
Yeah, raising taxes it does also help.
Every time they increase interest rates, all the people with no debts and lots of savings go, yay! Even more money to spend. We've already made £500,000 free on our house, and now my savings are going up.
Got a triple lock,
and they wonder why inflation keeps going up.
Yeah.
So the only way to stop that happening is there's no other way than taxing them, really. Yeah, there are lenders allowing people to repay up to the age of 80.
Yes,
in their terms.
I mean, how frightening is that?
Yeah.
I mean, 75 is now a common age for your mortgage to end. That's frightening.
Popalop says, this is maybe a question for the next video. Could we experience hyperinflation in this country?
Oh, dear God. That's like asking, are we going to experience World War III? I mean, you're pretty much on the same. You started with the nuclear war thing last time. I'm not having that rubbish.
Right. Arwen the Bard says, the Stig is really AI. Well, you're right, but not in the way that you think. He is AI, as in he's actual intelligence, not artificial intelligence.
Although I am trying really hard to kill that with alcohol.
Yes.
So,
Right. Guys, I think it's time to wrap this one up. We're going to take a break.
Yep.
And then we're going to come back at 10 o'clock.
Are we? Okay.
Yeah. So
10? How about 9:30? I need to get home at some point. You only have one bed.
I need a bit of time to just...
Oh, all right. 10 o'clock.
We'll be back at 10 o'clock for a late night look at the economy.
That'll be exciting.
It will be fun. We'll talk about death and poverty and
Is
stuff like that.
Kicking Mustang on?
Yeah, Kicking Mustang is on.
Well, then ask him, does he want to join? Because that would be interesting. Because we have sort of
Yes.
opposing, sort of.
Okay.
It would be...
Kicking Mustang, would you like to join later on? If so, let me know and I'll send you the link.
And Charles Archer, if he's there.
Oh, and that Stocks guy.
Yeah,
on
that
Twitter, if
Stocks
you're
guy.
there. Yeah, great idea. Let's have a proper old
But
economy.
they all have to be drunk, which means if you're not drunk yet, you better start drinking now.
I'm not going to be drunk. I'm not.
Oh, you're hungover because you're a
hungover,
lightweight.
yeah, I'm a lightweight.
You have the liver of a 6-month-old baby.
I'm going to call it, guys. I'm sorry, I've got to call it. Thank you so much for all of your questions. I really appreciate the questions. I'm sorry I couldn't get to more of them. Thank you for making another record turnout. Amazing. I hope you're enjoying it. There's the robotic hand. Did you see it? It's actually a cyborg. Was it exoskeleton?
No, I'm okay.
Endoskeleton with flesh
Let's
covering,
go up.
like the Terminator. He's actually the Terminator. He's back from the future. Yeah, I'm going to shut up, guys, and see you at 10 o'clock if you want for a good old, slightly inebriated ramble about the economy.
Yeah.
Alrighty.
Dos
See you then.
Vidania.